Hello, and welcome to another presentation. In this presentation, I'm going to discuss what is a CUSIP number. Many people have contacted me trying to access a birth certificate account based on a number that's on the back of a birth certificate. This is the incorrect use of that number. You cannot access that type of an account. It does not work, in my opinion. I've never seen it work. I've seen many people who have attempted to use it for that purpose, and it has failed. So this presentation is going to discuss what is a CUSIP number and how it can be beneficial to you. What is a CUSIP number? A CUSIP number is a unique 9-character alpha identifier assigned to a financial security in the United States and Canada, possibly other places as well. It acts like a serial number for stocks, bonds, and other securities, facilitating their identification in the trading process. The CUSIP system is owned by the American Bankers Association and is managed by S&P Global Market. Now, with this information, we know that a mortgage, a credit card, potentially a court case, and other loans and agreements can be securitized. Securitization, or a contract without full disclosure, is illegal. Based on that now, you should be able to draw the conclusion that if you have a mortgage or a loan contract, you could challenge the validity of that loan contract, because there's a legal process that states a person can't be double dipping. They can't be collecting from you as well as the securities on the contract. And if they've traded the securities on the contract, they're no longer the holder in due course. How CUSIP numbers monetize your debt? What's at stake? Every time you take out a loan or incur a debt, like a mortgage, a student loan, a car note, a credit card, even hospital visits, and other transactions, that agreement is often transformed from a simple IOU into something much more valuable to banks and investors. This is done through the process called securitization and is at the heart of the CUSIP number, a unique Wall Street identifier that identifies your loan contract. Now, many times loan contracts within a mortgage are pooled together, and they have been for quite some time, and this creates a problem. It's kind of like if you're in a divorce and you have a joint bank account. Whose money is it? Right? It's all mixed together. So is it your money, her money, his money? Who knows? By understanding this concept, it's pretty easy to see now that if your mortgage has been combined with other mortgages and sold on Wall Street, it would be very hard for the other party to prove which part of that contract is yours. Why does this matter to you? Because understanding how your personal debt became a tradable, profitable asset changes how you approach debt and dispute collections, and you interact with lenders. As you can see from my explanation here, your CUSIP number is not something that you can access. It's no pot of gold at the end of the rainbow. But what it is proof that your contracts have been securitized. Your birth certificate has been securitized, and that's how we end up with certain benefits. Health care for one. Old age security for 2, CPP or OAS or the other transactions for 3, and your financial payments when you retire are all done through securitization. But in this process, we're only going to discuss what would happen regarding a mortgage or a loan contract, just to keep things simple. CUSIP stands for Community on Uniform Securities Identification. Like I said earlier, it's a 9-digit alphanumeric code that uniquely identifies specific financial instruments, including stocks, bonds, including mortgages, mortgage-backed securities, securitized debt, bundled credit cards, student loans, auto loans. The CUSIP ensures the financial instrument can be tracked and traded and is recorded as a standardized financial market, especially in the US and Canada, and possibly other places as well. A debt without a CUSIP is a private agreement. with the CUSIP, it becomes a financial commodity. We're only interested in this presentation with the ones that are a financial commodity. In other words, those with a CUSIP number. How debt becomes a CUSIP number. When you sign a loan contract, the lender or bank or servicer person bundles your note with others, creating a large pool of similar debts. This pool is packaged as a security, an investment product activated on Wall Street or through some other financial outfit. The CUSIP is assigned and bundled as security, making it tradable as the secondary markets. Mortgage-backed securities are bundles of home loans. Asset-backed securities are bundles of credit card or auto debt. Student loans are also run through this process. Now, if your mortgage or your loan or your credit card has already been paid through the securitization, that means the company that you're dealing with is double dipping. They're making profit on the securitization of the document, and they're also trying to fleece the funds from you, which is double dipping, and that's not allowed. This, therefore, puts all these types of contracts in fraud. Fraud does not have an expiration date, and therefore you could potentially challenge the validity of these contracts. Why do banks do this? Banks profit by getting cash up front by selling your debt to investors, and it's usually done within 90 days or less. And liquidity. Selling debt frees up cash so banks can issue more loans. Risk transfer. The risk of your default is shifted to the investors, not the bank. If the bank doesn't have your original promissory note, then your obligation is no longer with them. Okay? It's not by the original lender, and it can be sliced and repackaged and sold, often without your knowledge or your consent. Many people have contacted me telling me they've received some note from some financial broker saying your loan is now with us. Well, if that's the case, you don't have a contract with them. Similarly, when you have a debt and it goes to a third-party debt collector, you have no contract with them either. And since the debt has been sold, they've been paid when they sold the debt. Therefore, trying to get extra funds from you would be illegal. How CUSIPs and securitization affect your rights. Now, as we know, the Canadian and U.S. market go through the Security Exchange Commission, sec.gov, and therefore they're subject to U.S. law. So if you look at USC, which is United States Code, and you look at specifically Section 77B, almost any form of debt, if packaged and sold, is termed as a security and falls under the financial securities law. That's excellent news for us because now we can use the UCC, Article 3-301, only the holder in due course can enforce or collect on this debt on a negotiable instrument. A negotiable instrument is any instrument that you've signed. If your debt is sold, the original holder may lose this right. The other thing we can look at is the UCC 9-203, the security interest, i.e. the right to enforce the debt, is only valid if the lender gave real value and holds a valid agreement. But the lender did not give any of its own funds, unless it's a private lender. But if it's a conventional lending institution like a bank or a loan company, they more than likely did not provide any of their own funds. In fact, under the banking acts and banking rules, banks are prohibited from loaning their own funds in most circumstances. SEC Rule 15C-211 requires full disclosure to investors on what is being traded. If your debt is securitized, you may be entitled to request an information on how it is being handled or traded. You have the right to do that because you are a party to that contract. Now, many people have told me, well, banks don't sign the loan contract. And although this is technically partially correct, it's not 100% correct. Because many times the bank will put an X and says, please sign here, and they'll put an X. That X can be classified as their signature. Just like in the old days when people were incompetent, they would often use their thumbprint to identify themselves because they didn't know how to read or write, which would also invalidate the contract, because if they didn't fully understand it, then contract could be challenged. So, how to find out if your debt was securitized? Review your loan or mortgage statement. Look for language about transfers, assignments, or the name of a service that you don't recognize. If you don't recognize the servicer, then if it's not the actual institution that you were in their office signing documents, then most likely the document has been transferred or sold. You can also contact your loan servicer. They are legally required to tell you the current owner of the debt and whether it's been sold. Online tools include Freddie May and Freddie Mac loan lookups, the MERS database, and you can also look under the SEC Edgar system. Search for the mortgage-backed or asset-backed security by the loan servicer's name. Look for pooling or servicing agreements, and also a lot of times it refers to on the documents, it says different things which indicate that what they're dealing with is the actual loan agreement. This takes a little bit of work and a little bit of understanding to do, but it can be done. Why this matters. A debt discharge, challenge, and consumer rights. If a debt has been securitized and the original owner sold it, legally they don't have the right to collect it. If you take an automobile, for example, and you own it, and you sell it to your neighbor, do you have any more jurisdiction or control over that vehicle, over that automobile? The answer is no. Well, the same thing happens with your loan agreement. If the lender tries to collect from you, as well as by selling the note or collecting from the investors, then that's a big problem. That's double dipping, that's illegal. If you're facing foreclosure or a collection process or litigation, I would strongly suggest you investigate these avenues and look into it. You will want to challenge the claim on this alleged debt because the debt's been sold or transferred. Additional steps. Demand proof of ownership and legal standing. Ask them if they are the current holder in due course. Request an accounting ledger for all disclosure documents. Use UCC 3-305 to challenge the claims not made by a valid holder. In other words, if you have a vehicle, like let's say a car, and you sell it, you don't have any control over that vehicle anymore, so therefore how can you make any demands? You can't. If disclosure is refused, it could be grounds for a legal complaint. And also, it could also be used in an affidavit, as I expressed in one of my earlier interviews, where I stated that an affidavit can be used to establish the facts in a court case. You will do likely the same thing in this situation. The bigger picture. Profits, rights, and responsibilities. The system is designed for profit. Once your debt has a CUSIP number, it is a commodity, not just a personal obligation. Disclosure and transparency are often lacking. Many borrowers never know that their debt has been securitized. Now you have some empowerment. Empowerment comes from knowledge. Savvy consumers question all collection claims and demand documentation and understand their rights under federal and state law. Legal recourse is available if you can challenge the improper collection or failure to disclose in court. Any contract without full disclosure is null and void. Final insights and recommendations. Always check if your loan or debt was securitized. The presence of a CUSIP number is a major clue. If you received a document that says your mortgage has been sold or transferred, another major clue. Never accept a debt collection claim at face value. Request proof, especially after suspecting securitization. Study the basic laws under UCC 3-301 and UCC 3-305, as well as UCC 9-203 and the Security Exchange Act. If need be, consider professional legal advice from a complex dispute. It is highly unlikely, however, that you will get any kind of help with a law firm or a solicitor, as this would expose the fraud in all mortgage contracts and put the whole mortgage system as well as loan agreements in disrepute. This would not be tolerated or accepted by the courts, and especially coming from a lawyer, they would lose their job. Keep in mind that when you want to challenge a legal contract or a legal agreement, you have every right to do so. Also keep in mind that if you are going up against the system, do not expect it to be an easy fight. Bottom line, understanding the CUSIP system and securitization transforms, confused borrowers into informed and proactive participants, capable of defending their rights, avoiding double collection, and flipping the script on debt. The information presented here can also be used against debt collectors. If you have a debt collector trying to collect funds from you, you can basically use the same system. I hope you enjoyed this What is a CUSIP number presentation, and I can be reached at the address shown on your screen. I will be writing a detailed book in reference to this type of securitization and what can be done about it. If you would like to be added to that mailing list, please send me a simple email and I will keep you on the list. I will also be doing updates shortly through YouTube on other books and processes that I've written. It takes quite a bit of time to proofread, check, and verify every fact, and also verify that the law hasn't changed from the time I started the agreement or the book into the time when it's published. I thank you for listening to this presentation. I hope you found it useful. I look forward to bringing you additional information in the future. Thank you again and have a great day.